We're thrilled to be here today. My name is Manoj Mohanan. I'm the interim dean of the Sanford School of Public Policy at Duke. This lecture is made possible by the support of David M. Rubenstein. We thank him for his longtime engagement with Duke and Sanford and for creating this lecture series in particular. To our co-sponsor for today's lecture, the Department of Economics at Duke, Steve Medema, thank you so much for your collaboration on this event. And now it's my pleasure to introduce our speakers and get our program underway. First, our distinguished guest, Dr. Gita Gopinath, is the Gregory and Anna Curfey Professor of Economics at Harvard University. Her research focuses on international finance and macroeconomics, and she's a leading voice on dollar dominance, exchange rates, trade, investment, international financial crises, monetary policy, and debt. That's a long list. From 2022 to 2025, she served as the first deputy managing director of the International Monetary Fund, the IMF. That's not the Tom Cruise version. So she was the official number 2 at the IMF. And in that role, she oversaw the work of senior staff, represented the IMF at multilateral forums, maintaining high-level contacts with member governments and board members. She also led the fund's work on surveillance and oversaw large IMF programs such as those for Argentina and Ukraine. Ms. Gopinath previously served as the chief economist of IMF from 2019 to 2022, and as chief economist, she helmed 13 releases of the World Economic Outlook, which included forecasts of the impact of the COVID-19 pandemic on global economy. Her research is widely cited and has been published in many top-tier journals in economics. We're very pleased also to be joined by David Rubenstein, who is a Duke alumnus, 1970 graduate of Duke, and he's also the co-founder and co-chairman of the Carlyle Group. David then went on to the University of Chicago's Law School, where he got his law degree in 1973. He's a Baltimore native and chairman, CEO, and principal owner of Major League Baseball's Baltimore Orioles. They just had a great victory yesterday. Mr. Rubenstein is a recipient of the Presidential Medal of Freedom and chairman of many educational and nonprofit boards. He's an original signing of the Giving Pledge and the host of the David Rubenstein Show, the Bloomberg Wealth with David Rubenstein, Longevity with David Rubenstein, and Iconic America, our symbols and stories with David Rubenstein. So with that intro, we look forward to the conversation. Thank you, both of you.
Thank you very much.
Thank you.
And thank you all for coming. So thank you very much for coming. So you are a professor at the Duke of the North, Harvard, is that right?
That's right.
And let's talk about your background for a moment. Where did you grow up?
I grew up in India.
Okay, and did you say as a little girl you wanted to be an economist?
Absolutely not.
So what did you want to be?
This was back in India in 1989, and I was figuring out what to do with my life. And at that time, no Indian kid says they want to be an economist. I mean, that was like a failure, right?
What was
You wanted to be an engineer or a doctor was what was the standard path to go. My parents thought it would be a good idea for me to try something else, which is to join the Indian Administrative Service, which is the leading civil service in India, and therefore economics would be a good subject for it. So I was basically pushed into it. Okay. And then I stuck with it because 1990 and 91 was when India had the so-called external account crisis, the balance of payments crisis. And that's how I got into economics.
All right, so you went to college and you got your undergraduate degree in India, right? And then you wanted to do graduate school in the United States. What did you say to your parents about, I want to leave my country and go to school in the United States? Were they happy with that or not?
It was actually a common thing to do, so it was not out of the ordinary. And I wanted to get a PhD, and it was considered like that was a good way to get a PhD in economics. So that was nothing surprising.
But you ultimately got your PhD at Harvard?
At Princeton.
At Princeton. And at Princeton, who were your faculty advisors?
There were a couple of people you may never have heard of. One is Ben Bernanke and the other Ken Rogoff.
Okay. And did you think they were as smart as their reputation, or you think they weren't as smart as you thought they were supposed to be?
No, they were phenomenally smart.
Okay. And then you spent some time at the IMF, right? For those people that aren't familiar, what does the IMF actually do?
Great. So the IMF is one of the institutions that got created after, actually just before the end of the Second World War, with the idea that we need to find a way to avoid countries going into wars with each other. And maybe that can happen if we work together, have more economic interactions, and find a way to resolve our differences. And so the more interconnected we are in economics and finance, the more stability we have in the world, we may have fewer such crises. So there are three things that the IMF does. The first, which is its most famous for, is it's a lending institution. So it lends only to governments, so it doesn't lend to the private sector. It lends only to governments, and these are to countries that are in a crisis. So countries that are running out of dollar reserves, foreign exchange reserves, they can't pay for their imports, or they have they borrowed in dollars and they can't repay it and nobody's willing to roll it over. That's when the IMF comes in. It's the lender of last resort. It helps the country with the funding, also helps put the country on the path to a better place in terms of macro policies so that you don't have a repeat crisis. At least that's the hope. So that's the one that the fund is famous for. But it does two other things which are really very important. One is surveillance, which means basically the IMF, it has 191 member countries. The IMF goes to each of these countries and every year provides a report card on your macro management of your economy, your fiscal policy, your monetary policy, your financial reforms, what are you doing? And this is quite unique because this is the only institution that every country who's a member of has agreed to. This is a part of their obligations to the IMF, is that they subject themselves to this article. It's called the Article 4. So that's very important, which is why the IMF, I think, has this unique vantage point in terms of what's happening in the global economy. And then the last is what's called capacity development, which is helping countries, for example, countries in sub-Saharan Africa, on how to just build the institutions to have a good macro environment, right? So for example, if you're setting up a central bank, how do you set up a central bank? What exactly does a central bank do? If you want to target interest rates, how do you actually do that? What do you wake up and do the first thing? So those are the things that the IMF does.
Now, does the IMF give grades to economies like the United States? Does the IMF ever look at the United States economy?
But yes, absolutely. It has an Article 4. It just came out.
The IMF say that the United States has too much debt?
It has been saying that for several years now.
So speaking of the U.S. debt, right now we have how much U.S. debt? $38, $39 trillion. Is that sustainable for the U.S. economy to have that much debt?
So the thing with the US is it's not just where the US is right now in terms of the debt levels, which is if you take the general government, that's 120% of GDP, but it's expected by 2031 to hit 140% of GDP. And if you keep looking ahead, the US economy is going to be running deficits, and you're looking at debt continuously growing. So while there is no crisis at this current moment, in the sense of, if you look at markets and the rates at which they're lending to the US, there's a lot of appetite still for US debt, and we can talk about where that comes from. But yes, the way the trajectory of this looks unsustainable, and that's a point that has been repeatedly made. The question is, how are you going to fix it? It's going to take actions on both sides, both on revenues and on entitlements.
I should have asked you, why did you want to be an economist, and why should anybody, let's say students here, want to be an economist? What's so good about being an economist?
It's great. By the way, I can answer that question better now after having done my job at the IMF, which is, it is hugely consequential to large, millions, billions of people on the planet, whether you do good economic policy or not. It's just, when you track countries, and staring at the 191 countries, the countries that work, they work because they do the simple first principles. They get the first principles of economics right. And therefore, it is hugely consequential. When countries fail, they fail because they can get some of these big questions about how to manage inflation, how to manage your debt, wrong. In addition to obviously the other structural aspects, which is on making sure you have good education and healthcare. It is remarkably consequential, and I think that's why.
Well, if somebody has an economics background, why not do something more important like private equity or investment banking? Why would you want to be an economist? Have you ever thought about going to private equity or investment banking, something useful?
I think I've been doing something very useful, but absolutely, all of these different lines of work that you can get into in terms of the financial sector, phenomenal, get into it. You need all of these different institutions. One of the things that, developing countries still have a deficit in is well-developed financial markets. And so I have full respect, and I think that that's a great line of inquiry to go into. So I have no problem with that. I personally do love research too, which is why I'm back at Harvard.
Let's talk about the U.S. economy again for a moment. Historically, the U.S. economy goes into recession on average, maybe every 7 years or so. We haven't had a recession for quite some time. Aren't we overdue for a recession? And are you worried about a recession coming soon?
We did have the pandemic in 2020 when the US economy shrank, but that was the pandemic. And you're right, the business cycles in the US and pretty much other parts of the world tend to be once in 8 years. Can you say that there's going to be a recession happening? Nothing that's happening right now points to that there could be a recession in the near horizon. Consumption is strong. US households are in good shape as a whole in terms of consumption spending, in terms of their balance sheets. Banks have fairly strong balance sheets, but there are a bunch of areas where things can go wrong and where risk is building up. So some of them are one, I would say in terms of AI. AI is a big driver of the US economy right now, both in terms of the scale of investment that's happening, but also the appreciation in the stock market that you had over the last couple of years. That's helping raise wealth and consumption through that. That's a space where you could see a correction. The question I ask myself every time when I look at these companies is what is going to give them the kinds of profits they will need to justify the very large scale of trillions of dollars of investment being made in AI. This is not a statement about the technology itself. I actually think it's profoundly transformational. I think it's going to have a very discrete effect on productivity. I personally use it. I think it's really great. But I think there's a lot of competition, and you could see another company, another DeepSeek-like event that, for a fraction of the cost is able to provide the exact same product, in which case the incumbents right now may be highly overvalued.
Right. So if you were to read a standard economics textbook, it would say every economy has some inflation, maybe 2% or 3% is fairly standard. Our inflation for recent years has been higher than that. Are you worried that we are in a cycle where we're going to continuously have 3% or 4% inflation, or you think inflation is coming down and it's manageable now?
I think we're in a world where we are certainly being exposed to a lot more shocks that are what look like supply-side shocks. So it's not that demand is too weak or too strong, but supply is too weak or too strong. And we saw that, the pandemic was a big supply shock. When Russia invaded Ukraine and you saw oil prices and gas prices shoot up, that was a big supply shock. We're seeing in the Iran, Hormuz, that's another supply shock. The world fragmenting is also another supply shock. So I think we're going to be in this world where we will see more volatility in inflation. I don't think that translates necessarily into the on average inflation rate drifting up sizably. I suspect the Fed at this point is okay with inflation as long as it starts with a number 2 at the start, but maybe 2.8, maybe 2.9, but maybe it's okay with that as opposed to a 3 number. So I don't think there's a reason to expect that they will drift to 4 or 5% on average inflation, but we could easily have months, and I think the month inflation for March will pop at over 3%, 4%.
U.S. government set up the Federal Reserve System in 1913, and it's designed to separate the management of the money supply from political considerations. But do you think it's a good idea for the President of the United States to tell the Chairman of the Fed, and many presidents have said this, lower interest rates? Do you think that's a good thing or a bad thing when presidents want to lower interest rates because politically it's helpful to them?
Right. So by the way, this is classic because every politician in the world wants lower interest rates. I don't know a single politician who doesn't want lower interest rates. And there are many occurrences where you will have politicians say that publicly, that they would like lower interest rates. All of that is talk. I think it's a huge problem when you are using the machinery of the state to put more pressure on the central bank. Now, again, nobody's saying that the central bank is completely unaccountable. I mean, that's not the way central bank independence is defined. Central bank independence is you are accountable, which is why the head of the central bank goes to Congress, explains what's happening. They get the mandate from Congress in terms of what the goals are, which is inflation stability and price stability and full employment. It's the operational side, which is how do you accomplish those targets? That is where the central bank is supposed to have independence, and that's critical. And we've seen, and I think this is where the IMF can really speak to, because when you see countries going off the rails, it is because you have these attacks on central bank independence.
Okay, so right now the inflation rate in the United States is roughly, I don't know, around 3%
Yeah.
or something like that. So what do you think is ideal? Inflation should be, for 25 years or so after Paul Volcker, we had about 2% inflation, more or less on average. And now we've got about 3%. Is 3% more or less acceptable, or do you think we should go down to the Fed's target of 2%, or is that going to slow down the economy if we go down that level?
If the Fed could credibly communicate that 3% is where we're going to stay at, and this is it, then that works. But the problem with anything of this kind is that once you're at 3, then the sense is, well, maybe you'll go to 4. And the expectation shift in terms of where inflation may settle. So I think that the Fed will not say that we're okay with 2.8 or 2.9%. They will not publicly say that they're okay with it. They may allow for periods of that level of inflation, but they will want to come back to 2%. It's just, the fear of drifting away is a problem.
Now, since the end of World War II, the United States has had the currency, which is essentially the only reserve currency in the world. Do you think it's good for the world to only have one reserve currency? And do you think there is any challenge to the dollar in being the reserve currency in the future?
It's always been the case that there has been a dominant currency, at least the last 200 years. You've had the British pound that was the dominant currency, and then the dollar took over decisively after the Second World War. There are good reasons to have a few currencies, not to have, there are about 180 currencies in the world. You don't want all of them being used all the time in international transactions because there are network effects. It helps to have all of us using, it's like sometimes speaking a common language is helpful. Having a common currency for a lot of international transactions is also helpful. What are the problems with it? Of course, the problems come if you do end up, if there is any kind of weaponizing of the currency, if you have sanctions that are being imposed and taking into account the fact that you have this monopoly power of your currency in the world market, those are the times when it is particularly worrisome. To your question of what about the dollar, what's likely to be the case, it remains the case that the dollar is the dominant currency. So if I were to, I think in terms of a few facts for you to keep in mind, the dollar is about 60% of trade transactions, 60% of foreign exchange reserves, 60% of international bank claims. The US economy is about 24% of the world economy. So it's about, it's significantly, its share in all of these international transactions is very high. It's been around there for about the last 10 years. It moves around a lot. Where have we seen any kind of meaningful changes? One, I think people should know that when it comes to China, about 15 years ago, China, in the renminbi, in its use in China's transactions with the world was 0%. So China was doing entirely, most 80% dollar, 20% other currencies, 0% renminbi. That was 15 years ago. Right now, 50% of China's transactions with the rest of the world is in renminbi. So China has internationalized in terms of their own transactions. Russia has clearly moved away from the dollar, but these are all on the fringe. And the other currency that's gained a lot of attention is gold. Gold has gotten more attractive, and central banks are also acquiring more gold reserves. But these are, many of the changes otherwise are at the margin. And, and we saw this also during the Iran conflict, is everybody moved to the dollar. There was a safe haven effect there.
Now, historically, at least since the time Bob Rubin was Secretary of the Treasury secretaries are told, you can only say one thing about the dollar. We want a strong dollar. But in this administration, no one wants to say that because I think some people say they want to lower the value of the dollar, which makes it easier for our exports to go overseas. Do you view the value of the dollar as being at risk, and do you think the dollar will further decline as it has in the last year or so?
Right, so two things. One, I think it's a very flawed argument which has persisted for a long time, and several people in this administration have pushed this view that the dollar being the reserve currency of the world is what makes it end up running these deficits because it's just a strong currency. And the dollar strength is a big factor behind. That's simply not the case. If you just look at the data and you look at what are the main drivers of deficits, trade deficits in the US, it's not coming from the exchange rate. The reason I'm making that point also is because if you think of which are the big episodes of global imbalances or big trade deficits in the world, one was in the 1980s. Then there was the 2000s, which was right before the great financial crisis, and now. So I think those are the three major episodes. Before the 1980s and before you went for the Plaza Accord and so on, the dollar was appreciating. Before the great financial crisis, the dollar was depreciating, and now it did appreciate for a bit, but it's gone sideways. So that logic is incorrect. To your question of whether the dollar could weaken, again, the dollar, just like business cycles, the dollar also has these cycles, and it's had about a 15-year period of fairly continuous appreciation. Usually, when such cycle happens, you have another period of several years when the dollar can depreciate. So there are reasons why you could expect the dollar to depreciate, but I think it has nothing to do with what the administration says should be the direction of the dollar.
Now, the president has been concerned since the time he got into public office about the trade deficit. And now the United States has roughly a $1 trillion annual trade deficit. Do trade deficits really matter that much, or are they really things we could ignore?
Yeah. Trade deficits matter to the extent that it tells you about what the problems that may be underlying it, right? So trade deficit just mechanically as an identity is tied to the fiscal deficit and the household saving investment deficit, right? And so I worry about the US trade deficit because I think it's a reflection of unsustainable fiscal deficits in the US. That is a problem. It is also a reflection of China having an unbalanced growth strategy, which is reliant mainly on export and investments and not enough on domestic consumption. And so trade deficits are a problem because they represent unbalanced growth strategies. The US relying too much on, not relying, but having excessive fiscal deficits. China having too weak domestic consumption. This is not sustainable, and therefore, that's a sense in which it's a problem. But tariffs are not the solution. They just don't work.
Let's talk about unemployment. Economists will often say that economy is at full employment if you have 3 or 4% unemployment. What do you think is the right rate for an unemployment rate to be, for an economy to be doing reasonably well? And can you realistically get unemployment down to 2% or something lower than that even?
Right. So obviously this varies by country. It depends upon what other structural features you have of your country. And there are countries, for example, where it is very hard to, labor markets are not very flexible. So if you hire a worker, it's hard to fire the worker. Those economies tend to have higher unemployment rates. There's, people are afraid to hire people because they think they're not going to be able to lay them off if something goes wrong, and the other way. So there's structural aspects. So every country structural level of unemployment is different. In Europe, it's higher. It's around 5, 6, 7%. In the US, the structural unemployment rate is more like closer to 3 to 4%. That's where we are. Now, can you go to 2%? Well, there's a trade-off, because if you go to 2%, the sense is then you are having to live with high levels of inflation. And there was a time before the pandemic when everybody had the sense that somehow that we could run the economy hot. In fact, the Fed talked about that. They talked about running the economy hot because it seemed like you could reduce unemployment and still not worry about the effect on inflation. The inflation wasn't showing up. But I think what we've seen in the last few years is that that's not really the ideal model of the world. And unemployment rates, if you're trying to push unemployment rates down to 2%, then you're going to have to accept higher inflation.
Now, some people say that the father of modern economics was Adam Smith. He wrote a book in 1776 called The Wealth of Nations. What did that book actually say, and what was so significant about it?
Well, firstly, I think what was very important about that book was to basically say, what is the wealth of nations, right? So Adam Smith was writing at a time of mercantilism, and everybody was trying to run surpluses because that was a way of accumulating gold. And the idea was you were a rich country if you had more gold. And what Adam Smith said was that, no, the metric of whether a country is rich or not is not whether it's gold, but it's about how productive its population is. And he took it back to the point of what do the typical average person who lives in the country, what work do they get, how productive are they, how much do they get paid for it? That was the relevant metric of the wealth of a nation, not the amount of gold that's being accumulated.
Now, modern economic theory was said to have been reinvented by John Maynard Keynes. What did he say that was so significant when he came out with his famous treatise in, I think, late 1940s?
What Keynes basically pointed out was that it wasn't a good assumption to assume that the economy was self-equilibrating, right? So prior to that, there was a sense in which if demand exceeds supply, prices will rise, supply will increase, we're all in a good place, and then the other way around. If demand crashes, prices will fall, supply will adjust down, and therefore we're all good in a good place. But he said you could go through periods where you don't have this equilibrium mechanism working, you have all kinds of rigidities in the world, and he focused on wage rigidities and price rigidities. That was one, so to basically explain how you can end up with a Great Depression, because our models would otherwise have told us that that's an odd thing, that should not happen. So how can you have systematically long periods of unemployment? And therefore, a very important role for demand management in the world, which is you do have a role for the government to be able to spend and therefore raise demand, because that will be necessary. The other thing which I think really resonates through time is he spent a lot of time thinking about sentiment and about euphoria and so on, right? Which is how people feel about the world economy, of their economies matters as much as some of the details of what paychecks they get. That, I think, is playing out very strongly in these days. What's the effect of uncertainty? What's the effect of sentiment? I mean, those are the kinds of things you brought to the table.
So in the 1960s and 70s, another economist came along named Milton Friedman, and he said John Maynard Keynes was all wrong. Money supply is the most important thing if you're measuring how economy is going to do and you want to impact an economy. Was Milton Friedman correct? And has he been now agreed? People now believe that he was correct, or people now think he was wrong?
I think Milton Friedman's, what happens through a lot of these cycles of economic thought is sometimes then what happens is you kind of go to the extreme on each side. And Milton Friedman's point was, firstly, him and a few other people, was to basically recognize that if you're in a world where all you're trying to do is demand-side management, you could end up with people expecting more and more of this kind of demand-side management, and you just end up with then higher inflation. So there is a relevant trade-off that you have. And of course, he was famous for making the point that inflation is everywhere and always a monetary phenomenon. On that, I can tell you that that's not correct. having worked with many countries in the world.
Well, since the 1940s, presidents of the United States have felt they should have economic advisors, and we have something called the Council of Economic Advisors, which advise the president. But Harry Truman famously said, I would like to have a one-handed economist, because economists are always saying on the one hand this, on the other hand this. And he just said, give me an economist that has only one hand so I know what he really wants or she really wants. What do you think about that observation?
Yeah, I've heard that one. When push comes to shove, you have to make a decision. And that's what we did, when I was at the IMF and we were helping a country in the middle of a crisis. We were not telling them on the one hand you can do this, on the other hand you can do that. We were telling them, here is what we think will help stabilize the economy. But I think it's an honest recognition of the fact that it's a social science. Economics is a social science, so there's no absolute clear prediction of what, if you take this action, you will have that outcome.
Now, no discussion of any subject today is ever complete unless it has a discussion of artificial intelligence. So what is the impact of artificial intelligence on the economics profession in terms of predicting where economies are going to go?
Okay, so first of all, yeah, you're right. AI is now in every conversation, even about conversations about how to manage the unsustainable debt level, right? So let me walk through it. It is a transformational technology, which means that if it works out, we could end up with discretely higher growth rates. So instead of the US economy, which on average tends to grow around 2%, you could end up with, even if it went up to 3%, that would be fantastic on a steady state basis, right? For many, many years. There are estimates that say that it could go even higher. We could be talking about 4% growth. So anyway, so that's the plus, is that the sense is that could generate a lot of productivity improvements and therefore higher growth. Why is that helpful? Besides the fact that growth has many virtues, but also that's one way to repay the debt, where we don't have to tax anybody more because we're just going to grow faster, and through that we're going to be able to repay the debt. Second is questions on the job market. To the first one, if you ask me what is the effect right now of AI on the economy, I would say that the main channels, it is affecting the economy, but it's mainly through the investment channel, which is through all of the data center build-up and through the effect on stock markets and through the wealth creation, right? There are some anecdotes of how it's affecting productivity, but at least right now, based on the data we have, you just really can't look at it and say, well, AI is leading to a productivity boom, even though productivity is stronger. But there are many other aspects. There's obviously on the job front, what could happen with it, but there's also now national security concerns, people using it for nefarious reasons, many areas. We can go into those.
So Winston Churchill famously said that democracy is the worst form of government except every other one. But he could well have said that capitalism is the worst form of economic structure except every other one. Why is capitalism a good economic structure? And does capitalism inevitably leave some people behind? So you have wealth inequality that's far greater in capitalistic systems than you do in socialist systems.
So I think, again, besides these broad labels of what we call capitalism, we can all debate about what we call capitalism or socialism today. I think what is true, it remains the case, is that having market-based mechanisms for a lot of economic interactions remains the best way to do things. As an anecdote, I can tell you that when I was overseeing Argentina, and there was one year in 2022 when I was working with the Argentine government, and they were Peronists who were of the belief that the market could not be trusted, and everything could be determined by, we will set the price for soybeans and we will set the price for everything, right? That changed in 23, I think it was, when President Milei came in. Right. And he calls himself an anarcho-capitalist, which was the other extreme, which is said that the government is the source of all evil. So obviously, both are extremes over here. But recognizing the importance of market mechanisms, about fiscal discipline, all of that has helped put the Argentine economy back on track. So it's not one simple set of recipes. Country circumstances matter, history matters, the culture matters, but in terms of broad strokes, it works.
Now, to deal with the problem of people being left behind in capitalistic systems, Europe has developed a new type of capitalism where it's the gigantic social safety net. And do you think that that system is one that is a much better economic system for everybody when you have a big social net underneath at the bottom of the society? Or do you think the American system, where you basically sink or swim largely on your own, is a better system?
Yeah. So firstly, I think that, again, relative to many other countries in the world, the US also has a good social safety net. Again, this is a relative statement. It's not as large as what it is in Europe. So having well-designed mechanisms that if somebody loses their job, that they have access to unemployment insurance, you have health care, and you have retirement benefits and so on. I think all of that is very important. The problem we're seeing right now, and the problem that I dealt with over many years, is that these systems have just grown without any limits. And with every crisis, there's been more of the social safety net that's been built up, not necessarily done smartly, not done in a targeted manner, only for the most vulnerable in society, but just more broadly. And it's very hard to reverse those kinds of policies. So I actually do worry about being in this equilibrium where every time there is a negative shock, governments come in and promise certain things which they aren't able to unwind.
Now, under the Biden administration, something called industrial policy was reinvigorated, and we basically put a lot of money into manufacturing semiconductor plants in this country. The Trump administration has also indulged in what's called industrial policy by, let's say, taking a stake in Intel or doing other things to help or hurt certain companies. Do you think industrial policy is generally a good policy for the United States government to pursue, or does it usually not produce the kind of economic results that people want?
Right. So we have now this reemergence of relying on industrial policy. There was a period when that lost favor. And so I think sometimes we have to remind ourselves of why that lost favor over the last, the 80s and the 90s. And therefore, when we do it now, if we're going to do it, how do we do it the right way? So the standard thing that happens with industrial policies is, of course, you're helping one industry, and that means you're taking resources away from another industry. Now, you can decide as a country that because of national security reasons, we absolutely need certain kinds of manufacturing at home. So for that, or to build resilience in your supply chains, you need certain kinds of factories and certain kinds of industries. That is an argument to be made. Historically, what has happened is, at least from the economy-wide perspective, is that when you favor one industry, you are disfavoring another sector, and that therefore the economy doesn't grow as much. There are good ways of doing it and bad ways of doing it. So again, temporary and targeted is always the best way to do industrial policy, which is, okay, you provide the support. If you have to target particular industries, you do it, but you have to have a sunset date, which is not that we're going to keep giving you subsidies forever. You have a period of 10 years or so where we provide you with subsidies and then those end. And the problem, again, is unwinding those is very hard. But I recognize that the world that we live in, given all the geopolitics, calls for more production at home in certain areas. And therefore, you can, providing subsidies, again, in a way that you don't favor some companies, you don't end up with crony capitalism, is important.
For the students in the audience, why should they want to major in economics? It's complicated. It doesn't necessarily get you a better job. Why should somebody want to major in economics? And how do you know if you're majoring in economics or studying it that you're any good in economics? If you're not getting A's, should you go pursue some other course? Or if you're getting only B's or C's, should you conclude you're not going to be an economics PhD?
So firstly, again, coming back to the point I made, which is economics is super relevant. And sometimes you don't see that when you're in a classroom setting and you are solving a cost minimization problem. You may ask yourself, okay, well, this doesn't sound like it has anything to do with the world. It does, and you do need to learn the tools. It is super valuable. It doesn't matter how you apply it, if you go into the finance industry, or you go into consulting, or you go into policy world, or you go into academia. It is, I think it's a very valuable training for the mind in terms of thinking about trade-offs, thinking about, also, by the way, please understand general equilibrium, because the world sometimes forgets what general equilibrium is, which is if I move X, Y happens, but not recognizing the Z can also change at the same time. That's a way of thinking that is super valuable. And I think there's plenty of remuneration for a good economist.
Now, you presumably supervise some people that want to get PhDs in economics. The people that are getting PhDs in economics, are they really good in math? Are they really good in English? What are the subjects that make somebody really good as an undergraduate that makes it likely they're going to get a PhD and be a good PhD candidate?
I think that you do absolutely need to have some love for math and the technical aspects of it, right? So I'm not saying that you have to be good enough to get into a math department, but you do need you should enjoy the process of working with equations, simulating, and so on. I think that's a part of the training, so enjoying that is very helpful. You could be doing empirical work, but there is certain levels of math that you absolutely need. Second, I think it's very important to, besides taking your classes, to keep up with the world. Sometimes it's pretty shocking that you can see students, especially sometimes PhD students, who may not know there's an Iran conflict happening because they are so into your problem sets and to getting the next exam. You just disconnect from the world. Don't do that. Read the headlines. Even if you have 5 minutes, read the headlines. I'm going to plug for the IMF's publications, the World Economic Outlook. Again, don't read the whole thing. Read the executive summary. It gives you a sense of where the world is, what the questions are. So in terms of PhDs, you also need ideas. And I would say in the world of AI, where you could take a paper and you can say, can I tweak some assumptions and rederive the solutions? We have now AI to do that. So thinking creatively about the kinds of problems in the world that there are, being able to frame it properly is going to be very important.
All right. So you teach undergraduates from time to time?
Yes.
How do you know that they're not using AI to answer the exams that you might give them? How can you be sure they're not using AI to kind of answer your exams?
So I'm going to find that out because I just came back to Harvard, and the first class I've taught was to PhD students, not to undergrads. I will be doing that next. For the PhD class, one way of figuring this out is we're giving oral exams as opposed to any kind of take-home problem set or anything.
That's not a problem?
So we give, so the oral exam, well, it means that I have to give more time to it because we're actually asking people, but that's a way of figuring out whether do you really know what you're talking about.
Suppose somebody says, I don't want to get a PhD in economics, but I like economics. Is there any reason why somebody should major in economics if they're not going to get a PhD in it? What advantage do you get by having an economics undergraduate degree?
Yeah, I mean, the vast majority of people who major in economics do not do a PhD. And so there is a lot of demand. I mean, David, you seem surprised, but there is a lot of demand for undergrads, people who do their undergraduate work in economics. What does it teach you? I think it is, because it's a social science field, I think it's just great. It gives you the frameworks to think about the world, and obviously you won't know the answer to every question, and you will develop that over time. But asking the right questions is a huge part of solving problems in the world. And I think that training in economics will get you to ask the right questions and will give you the tools once you develop that thinking about how to actually solve those.
Now, most of the Nobel Prize winners in economics have been men. Do you think the Nobel Committee is discriminating against women? Because very few women have won by themselves the Nobel Economics Prize. Do you think it's discrimination, or there just aren't enough women in economics?
So, no, I don't think it was discrimination. By the way, my colleague Claudia Golden won the Nobel Prize. She's
PhD from the University of Chicago, yes.
and this was relatively recently. So it has been a field that has been unbalanced. Since the 1990s, the number of women doing their undergrad degree in economics and in PhD has gone up. So there's a bit of a lag in terms of the supply of women economists. But what is unfortunate is that in the 21st century, that ratio is completely stagnated. So if you look at the US PhD class, students who take PhD in economics, women are at around 35%, and it's been at 35% for the last 25 years. It's been stable at that level. The number of tenured faculty in PhD granting econ departments has drifted up to like 18%. But again, it's building up slowly. So for some reason, and I don't have the best answer for it, is that in economics, this flatlining is worse than, for example, if you look at the math department, where there's many more women, but we're much better than the engineering department, way better than the engineering department.
So if economics is a good thing to study, how come you couldn't convince your son to study economics and he didn't want to get a PhD in economics?
First of all, I'm not going to tell everybody that they should be doing economics. I think you do economics if you enjoy it, and if you enjoy it, that's a good reason to stick to it. I think my son probably got sick of listening to economics growing up and decided he wanted nothing to do with it.
All right. Now, you were at the IMF. Can you explain to the average person here the difference between the IMF and the World Bank? What do they do that's different?
So very simply, the IMF has a shorter horizon, if you want to think about it, versus the World Bank, which is looking more long-term. Or in other words, the World Bank is about development, about how does a country move from low income to middle income and keep growing. How do you develop your economy over time? The IMF is more about how do we help you in a crisis. So how do we get you, if you are having a financial crisis at this moment, how do we help you get out of it? How do you stabilize your economy? So it's much more short term. So the IMF doesn't work on areas of education. It doesn't work on, how do we have better schools, and we don't fund education. We don't work on, water or sanitation. We don't do anything on health except during the pandemic when we were helping at that time. These are much more these take time to develop in countries, and so that more longer development perspective is the World Bank. The IMF is much more crises, monetary policy, fiscal policy, macro management, which is more short term.
So today, talking your native country, India, how would you assess its economy and its economic structure, and what do you think can be done to improve the economy of India?
So India is doing well. It is, it is the fastest growing major economy in the world. It's growing at 6.5%, 7%, and is expected to keep growing at that level. What it's doing right is that I think over the last decade and a half, it's really pushed on building up public infrastructure in terms of roads, building up connectivity, airports, and so on. That has been super valuable. The other big is the digital infrastructure. It's called United Payment Interface, UPI, Unified Payment Interface, UPI, which is, again, very super helpful, and people have built new technologies on top of it. The digital infrastructure is strong. Now, there are many, many more reforms that still need to be undertaken. Something just very basic like land titling, land reforms, because it's very hard even now to sell or buy land in India, and that prevents factories from being built. The labor market, again, is very hard. It's not very flexible. That's another big area. The ease of doing business is still pretty tough. There are lots of bureaucratic hurdles one has to go through. So there are many areas that require further reform. But I think what I recognize is that despite the turbulence of the last 6 years, India's economy has done well in terms of maintaining macro stability. It has low inflation at this time, and there's macro management as best as possible.
Now, one of your colleagues at Harvard, Ken Rogoff, wrote a book essentially saying we're moving towards a cashless society where we don't have cash anymore. Is that a good idea that we don't have cash? anymore, and you think we actually are moving towards that?
Just in terms of the data, we certainly have over a long period of time moved towards a cashless economy, but it's not as if cash has disappeared. I think cash in this share of US GDP is like around 8% or so. There are countries, Switzerland has a lot of love for cash, discuss about why that is. Japan has a lot of love for cash, that's still there. But there are countries like Sweden where you simply can't use cash. In China, you can't go and buy in any market or sell in any market with cash. It's pretty remarkable, actually. Is that a good thing? There are good reasons why we like moving away from cash. One, because cash has this very high levels of anonymity, money laundering, financing of terrorism, and so on, which is probably where most of the cash in the world is being used at this time. And so governments around the world have, over time, basically got rid of higher denomination notes and moved towards people relying more on basically bank money.
In recent years, we've seen the development of something called cryptocurrencies. Is that a good thing for society to have cryptocurrencies, or is it really a scam that's waiting to collapse at some point?
So cryptocurrencies is a big bucket. You have, obviously, the Bitcoins of the world, and then you have the new kid on the block, which is, I guess, relatively new, stable coins. And unlike Bitcoins, whose value can fluctuate whichever way it wants to go, the stable coin is supposed to be maintaining a fixed value relative to any fiat currency. And since the US dollar stable is the one that's the main stable coin in the world right now, basically one stable coin, USD stable coin, should give you $1. The development over there, so there's, in terms of Bitcoin itself and crypto, if you see who's putting their money in it, there's a lot of, you're trying to speculate, you're trying to see whether you can make a fast buck. The gambling markets, the prediction markets are another space where people are doing this, so there's competition for Bitcoins of the world. Stable coins, on the other hand, is supposed to be the more serious thing, which is it's going to be okay. Suppose we indeed move to a world where we have no cash whatsoever, and we are relying on better payment technology. This is a payment technology that can work. So why is this good for society or not? There's one way in which I think the emergence of stable coins is good, is because it is putting competitive pressure on banks. Banks, for the longest time, have been charging pretty high rents on cross-border payments, not within the country, but when you look at cross-border payments. So I like the fact that there is a technology that now exists and a form of payments that provides competition to the banking sector. That said, and I think maybe we don't appreciate this enough, is if you're worried about cash, because cash was very anonymous and you couldn't really track transactions,
right,
most stablecoin transactions are also not traceable. You don't have the standard know your customer requirement. So there is, I think in that sense, there is an important trade-off over there, which is you're bringing back a level of anonymity that you were trying to kill by getting rid of very high denomination currency notes.
Now, President Trump is a Republican, and the founder of the Republican Party is often said to be Abraham Lincoln. Yet, President Trump got rid of the penny, which has Lincoln on it. Is that a good thing for our economy to get rid of the penny? I mean, because how do you make change without a penny?
No, I think it's a good thing to get rid of the penny. And also, again, since we're moving away from cash, I'm okay with getting rid of the penny. I mean, the cost of pennies, of just minting those pennies, was way more than the value of it, and there's no reason for that.
So observing college students and observing graduate students, what is your observation about how to succeed in academic life as a student? Is it to study all the time, don't study all the time, suck up to the professor? What is the best way to get along academically for a student?
Okay, so firstly, taking a page from my own life, is that it's not as if you wake up every day and you know exactly what you're going to do and who you're going to turn into and what you're going to become. I was completely clueless. I took one day at a time, and I took one class at a time, and I learned some things, and life threw some opportunities at me, and I think the one thing you can always do is make the best of whatever opportunity comes your way. So you're at this fantastic university here. You have a ton of opportunities, way more than I had, in terms of what classes you can take, what experiences you can get. That's what you should be thinking about, and making sure it's not like you're taking the easiest class or the one that you can get an A very easily. So challenging yourself, putting yourself in situations where, by challenging yourself means that there's going to be times when you are not fully comfortable with what's happening in your life, and you're pushing yourself. It can be stressful, but that's part of learning. And then you'll figure it out. I mean, what is it that you actually want to do? The kinds of opportunities that are coming up are, there's new ones. You are better placed than any of you and I are telling you what to do.
Now, if you study the history of the world, very rarely do civilizations dominate the world for forever or for centuries. The U.S. economy has been the biggest economy in the world for, let's say, since the end of World War I, or more or less. How much longer do you think the U.S. economy will be the dominant economy in the world? Or do you think we can do it for another 100 or 200 years, or it's inevitable that somebody will pass us? And who do you think is more likely to pass us, if anybody is?
Yeah. So if you were to look at the big shifts in terms of the US's role in the world economy, so on an absolute scale, it is the dominant economy in the world. And I don't like forecasting very far out, but for the foreseeable future, there's every reason to believe that it will be the main economy of the world. But in a relative sense, what's changed is the emergence of China. And China is a very large economy. It is just in terms of just this overall size of the economy, but also in terms of its weight on the global stage. It is punching more. That is a big development. That's an important development over the last 30, 35 years that's happened. That means that the world has become, it used to be, I would describe it as unipolar for about 50 years after the Second World War, maybe 50, 60 years. The US was really the one pole of the world economy. And now it is becoming more bipolar, I would say even multipolar. And you can see it in how different events are playing out in the world. There are multiple countries that have enough power that they're able to, not withstand pressure from when there's, for example, when India got subjected to tariffs, increasing tariffs by the US, they didn't rush in and try to negotiate and end it. So there is more power, there's more dispersion of power around the world than 30 years ago. But the US overall, I suspect, will remain the main economy.
We often measure economic progress or success by something called GDP, gross domestic product, GDP. But some economists have invented something called a gross happiness product. And do you think it's possible to measure happiness, and that should be something that economies take into account when they're measuring their success, than the level of happiness in a society as opposed to just the GDP?
Yeah. So firstly, and this is based on what I've seen in terms of research, is that if you plot countries in terms of their happiness relative to their GDP, it's a very strong positive correlation. So countries that have high levels of GDP tend to be countries where happiness indices are higher. The only time when it's increasing, right, but right at the very top, when you become a really rich developed nation, then there seems to be some flatlining or some suggestion that maybe you're not just every additional GDP increases is making you happier. I think the best way to do this, and we do it all the time, even when we were working with countries, I don't care about happiness index, but not that I don't care about happiness, but I don't know what to do with happiness index. But I think you always want to look at multiple indicators, right? So GDP, I think of it as a great measure. It's one piece of information that you have. But then you're also looking at other measures, like you're looking at the level of financial conditions in the country. You're looking at environmental shocks that hit the economy. You're looking at overall health of the people in the population and so on. So you have a dashboard whenever you are, as a policymaker, you're working with countries.
Who do you think adds more value to society? Hedge fund people, private equity people, or economists?
I mean, I don't know who these people who do hedge fund and private equity, many of them probably did an undergrad
So private equity.
in
That's
economics.
That's what I think too. Okay. So if you hang out with economists all the time, and when the economists are hanging out with each other, they talk about economics, they talk about anything but economics.
So, depending on who I'm talking to, but there is a wide range of topics. No, what do you mean by we talk only about economics all the time?
So, well, I mean, when you talk with your colleagues at Harvard,
Yeah.
do they talk about sports, or they talk about the weather, or they talk about economics?
Well, overwhelmingly economics, but we do talk about other things. Just like you guys, you don't talk about everything all the time, do you?
All right, when you got your PhD at Princeton, what was your thesis, and could you describe it in 2 sentences about what you wrote about your thesis, or is it too hard to describe?
It was not a great thesis, so that's why it's not easy to describe. It was about looking at capital flows into emerging markets and tying it to the behavior of their exchange rates. It was an okay thesis.
Now, as we get towards the end of our conversation, I wanted to ask you, are you an optimist about the US economy in the future over the next 1, 2, or 3 years? Or are you a pessimist because of our trade deficit, our budget deficit, our total indebtedness, other reasons? Are you an optimist, or you're a pessimist, or you're, like most economists, you're in between?
I'm not worried about the US trade deficit or the US fiscal in the next few years about concerns that arise from the fact that the US has trade deficits or has fiscal deficits. I am concerned about the risks that are arising by the policies that are being rolled out in terms of engagement with the rest of the world, which in terms of attacks on central bank independence, more generally institutions of higher learning. Those are the things I don't expect will show up in the next 2 to 3 years. But if we keep at it, we could be in a really bad place 10 to 15 years from now. That's what worries me more.
Now, is there an economist that you greatly admire, somebody over the last 50 years you think has had the greatest impact on the world positively, who happens to be an economist?
Well, all of the people you mentioned, we went through the long list.
Right.
Adam Smith and Keynes and Friedman and several who are living right now. I mean, Bob Lucas passed away recently, but he was a phenomenal economist. No, I think there are many.
All right, so let's suppose you're at Harvard now, but let's suppose somebody comes to you and says, you were the chief economist for the IMF. Would you like to go back and be the head of the IMF? Would you like to go back and be the head of the World Bank or be chairman of the Federal Reserve Board? Which job would you rather have?
I think, well, in terms of a rank ordering, I would, chair of the Federal Reserve would be very exciting. IMF chief would be up there too. Probably the World Bank would be something else.
Okay. All right, well, look, you've been a very good sport putting up with my questions, and I appreciate your doing it. I'll just ask you one final question. In the end, do you think you made a mistake by going to Harvard versus Duke?
Well, Duke never offered me anything, so I didn't have a choice to make.
All right, well, thank you very much.
Thank you.
Please join me once again in thanking our guests, David Rubenstein and Gita Gopinath. And Professor Gopinath, point taken. If Duke has not reached out to you, we should correct that pretty quickly then. Thank you again, everyone, for joining us. This was the last distinguished lecture of this academic year. We invite you to check your email for online evaluations for today's event, and we value your feedback and comments on the form, and as well as suggestions for future speakers. If you're interested in learning more about the Sanford School and our programming, please join us online at sanford.duke.edu. Have a great rest of your day, and thank you so much to all the students who are here.